All right, welcome to the presentation. Tonight is for Friday. This has been an interesting day by all accounts. We were talking last night's video. Look for retailers like Target, 53.69. We got filled. Went a little bit below that. Stops at 147.10. Yesterday, I also said look for AMD to pull in more to around, stronger support around 152, and NVIDIA. Well, we gave like that 118 number, and then if it breaks that, next level is 110. I'll get into that in just a few minutes. But for tomorrow, Friday, we have some interesting intraday trades today that may carry into tomorrow. Cadence is one because of the strength or recovery in NVIDIA. It would go without saying that Netflix had earnings today. It's going to really depend on the earnings call. It's down a couple bucks there. The implied move was $50. And I think a lot of people were looking for the market to maybe trade a little bit further down than maybe $7, right? When I look at the markets on today's action, I just want to share with you what the indicators say and suggest. The NASDAQ 100's been in a daily sell for a week and a half, and we got this mini correction and rotation out of mega caps into small caps, except for today, we lost about almost 2% of the small cap. Yesterday, I said, I'm looking for a pullback in the small caps. Now, here's part of the situation. You could see that this is a doji. This is what we call the low close doji. It's a trading pattern that I published back in a book I wrote called Candlestick and Pivot Point Trading Triggers in 2004. That's a very popular book. By the way, it had a follow-up. The second edition came out, I think, in 2017. And there's really not much to change. But the bottom line is you take a look at where after a doji, a market closes below the doji, the one-to-one, you look at the high to the close, that one-to-one risk reward objective generally may take 8 to 10 time periods. In this case, a daily chart, 8 to 10 periods. It's actually measuring a lot more than 214, 216 area. We're talking, and I hate to say this, but this is a very dynamic market where we're seeing extraordinary moves in any one given day. And I think that's a combination between not a lot of money in the market. A lot of money is not parked on the sidelines like some people might say. That's actually in T-bills accruing 5% return interest risk-free. So there's a lot of money on the sidelines in T-bills. It's not on the sidelines. There's a lot of money out of equities, but in interest-bearing funds. And so I think it was reported that even Warren Buffett owned like 6% of the nation's debt because him and before Charlie Munger had passed away, as he said on a CNBC interview, Charlie and we run into the auction. We're first in line every Monday to buy up all the T-bills. So he's not in cash. He's in T-bills, Berkshire Hathaway. So until those bills expire or they see clarity in the market, and a lot of people are talking about clarity isn't just what the Fed's doing anymore. It's what the next 4 years of fiscal policy changes might do with this political arena that's going on. And it's just not who's going to be running the White House. It's also, is it going to be a complete party sweep in the House and the Senate? Because things will get passed pretty quickly. And if the party is as unified as everyone is saying at this Republican National Convention, if the party is unified, if they get a 3-branch sweep, guess what? Then bills will get passed readily, quickly, and that means tax cuts, right? That's a positive longer term. That's way above what we're looking at for tomorrow's trade in the market, but it is what's on the mind of investors. And with that, it's going to create a lot of nervousness in the market. This is Cadence. I mean, Cadence Designs, if you're not familiar with this stock, pretty much it does the designs for chips. Their customers, a small little company called, one of their companies, is a small little company, NVIDIA. Now, it probably overshot the runway just a tad by the last 3-day sell-off, but it was melted down. And we did end the day with a small, mild buy signal. So I expect possibly a dead cat bounce in Cadence. It is holding supports on the monthly charts. So if this is maybe a trading range, it may take a few weeks to dig out of it. Meanwhile, NVDA, I think it is in a trading range. And first thing that we can talk about is we'll go right into here. This is a Thinkorswim platform, and this is what we were using for our first primary in the trading room, and what I was talking about on the video, I believe, yesterday. If I didn't, my bad. But the first level of support, and we'll change this up to a daily chart. Here we go. So it's against all these old lows right in here. You can clearly see it. So for a defined short term, if you were going to say, okay, I want to try out my hand in NVIDIA, you'd scale in lightly, like a third of your normal position. If it moves up, fills the gap, I think you can trade this as a range. If it breaks, you're not going to get crushed, and then you can add to your position, because the next major massive support's the gap down here at 110, 108 area. And then finally, everybody's looking for this to get filled. You can see that gap, as I think I reported on a video, wide enough for a semi-trailer to run through. And everybody is going to see that and knows that's there and will look to be a buyer there. So two things are going to happen. It's either going to blow right through that if it ever gets near there, or it's just not going to get there, because, you know, it's just generally typically not that easy when they're that obvious. More likely than not, in time, over time, that gap will get filled. And how it gets filled is either a partial fill gap, like it comes and tests the bucket 100, or it gaps below it and the gap is filled with a gap lower. I'm not going to make that supposition, because that's not going to make us money tomorrow. What's going to make us money, or at least what opportunities exist, I think that if there's no shoe to drop and anything bad happens, the market stays probably in this lull. At least for NVIDIA, we go back up and test between 2360, partial fill of the upside gap, fill that gap up there, and then see what the intraday volume looks like. But my 2 cents is it's got a pretty significant resistance there around, let's round down around 124. You want to watch that for tomorrow. Tomorrow's daily pivots, double check something here for you. Tomorrow's daily pivot structure is projecting a slight higher high. Look where the resistance is on the daily pivot, right there at that level that I just designed on chart basis. So there's a strong confluence of resistance right around, well, I said 24, let's call it what it is, 2343, 2347. So you might get a couple bucks if you do get up there. Watch that area for a resistance. As far as other markets, today we did some really neat things in Meta, and I'll give you the setup and I'll tell you why, and then I'll share with you what I'm looking for going forward. First and foremost, we came down. This red line represents the fact that I was talking about this in the live trading room, and the market opened higher, traded lower, came in, filled the gap. Midpoint of gaps is considered filling, right? So there it is. That's why I drew that red line. Guys, it filled the gap. It came back above the daily pivot. That's the fuchsia line, this pink colored thing. And you can see the PPS buy signal right here. And that's when I made my post in the live trading room by stating you can buy right here as a day trade. You need to risk underneath. If you want to hold it as a swing trade, then you got to risk underneath yesterday's low. And that's what this red line was signifying right there. As the market started to move higher, I said, listen, if you're in from here, trail your stop. And then I gave people the opportunity to say, if you want to take a small profit, bail. The initial profit target, by the way, in this market environment is the gap right there, the midpoint of the gap, which is coincidental again, because the midpoint of the gap, that red line that I drew in for the live traders with the trade room, at the end of the day, now you can see Thinkorswim's already projected what tomorrow's pivot resistance is. It's, let's call it 82, 81, 88. Maybe it only goes slightly below it. But the bottom line is, if you're in this trade and you're listening and you've been in our trade room, you know this trade was there. Give me a thumbs up on the video, or a comment, said, yep, saw that, heard that, did that, John. Great. Here's what we want to do is, just in this market environment, we don't know if the uncertainty of the market and the market's done having its little temper tantrum ahead of earnings. And again, forget Jay Powell, forget Christine Lagarde at the ECB. It's who's running not just the White House, but now it's the Senate and the House. And that's going to cause, that might be what's causing a little bit excessive volatility. So with that, let's point out a couple things and bring back TradeStation, and I'll wrap this up for you real quick. So for the for the IWM, this we've left the market in the S&Ps with not a lot of technical damage. We have a breakdown, a PPS sell. The Dow's still, maybe it's a little overvalued, but the Russell, to me, this low close doji is not great. I do think that it signifies a lower price. It doesn't mean that it's not going to be a bad buy. It's just, I don't know if we're going to get a full-fledged complete pullback in here and fill these gaps as well eventually before we ascend higher. But the McClellan oscillator got extremely overbought, and that's why we said we can't buy it up here, gang. You just can't buy it up here. You got to wait for a pullback. And now, as you can see, if we can get the McClellan oscillator back near zero, volume wasn't that bad today, as my indicators suggest. Even on balance volume says the pullback was fairly light. So again, I think the better play for trading IWM is not looking at August, but going out to the September. And as I said in the previous video, look at the at least look at the IWM, maybe the 22, 35, a widespread September, and have exposure, because if the market is going to pull up, pull back, where's the support? Support's either going to be these old highs, it's going to be the gap, it's going to be right here, it's going to be today's lows, but somewhere in here, we would watch this tomorrow. And I think on that pullback, if it's a true pullback, we're going to look at daily pivots. Some people would look at a 50% or a 618 retrace in Fibonacci, et cetera, et cetera. But in this particular market, I would just say it's not just price, it's also market condition. Heavy rally, light pullback. Volume was heavy on the upside. Pullback was very light on volume. Went a little bit extreme one way, it's pulling back, and we're seeing that overbought condition kind of correct itself right here, but with the MIC oscillator. Will it get to zero? I don't know, but it could pull back with another weakening of tomorrow. And I would look at the September 222, 235 bull call spreads. Give yourself some distance in that regards. And then we'll be monitoring that going forward, because I think this rotation is going to be real. It's just right now we're seeing market pressure in the market. So based on a lot of things that we're developing, such as the political arena, as well as what's happening with earnings coming up. So today, just as an announcement, here it is. We're pretty much virtually unchanged from where we were on the close today in Netflix. Netflix has a seasonal downtrend between now and September. Earnings sort of beat. We got other things that that the market's going to want to hear about in the conference call. It had a weekly sell signal. I was hoping to see a pullback in here around that 600, to be honest with you. And even I said in the extended hours, if it had at one point, I think we had a low around 610 or something, 608. If it gotten into like maybe the 595, 600, I was a buyer all day long in the extended hours. We just didn't get it. But going forward, here's a couple things that I think for tomorrow you could look at. Besides NVIDIA, AMD, let's take a look at what I was saying yesterday's video. Look to be a buyer on a pullback. 152 should hold. And then today's low was, as you can see, today's low is exactly 53.20. Not bad for identifying a support that came within $1 in this environment. So if by chance we get one more slam, take out the lows, market being tricky, treacherous, punishing people with stops, hit their stops, get down a little bit, you want to look for maybe a little a bounce out of that level. So I'm still supportive of the 52 area for a near-term buy. NVDA, as I said earlier, this 18 number is going to be important, but gets up to 23 and a half, 25. It gets a little rich. CDNS cadence is another one. I think it's if they can see it pop to the upside, it's going to be short-lived. 283 rallies will be sold. But I think that this is the first test of this massive low has the capability for a dead cat bounce. And then next week, we'll see exactly with Friday's close what we're in for. If we're going to see, like I said last night, and I'll say it again, I think we're going to have more of a decline in the market, but it's going to take time and it's going to be ugly. It's going to get rips. It's going to get dips. And it's going to be, I think if we go back and look at last summer, And we were back in July last year. The market rallied, same thing, just went up on thin volume. Almost similar situation. The market posted this engulfing pattern and stuck around and broke, and then rallied, and then broke, and then rallied again. See, from this swing low 45, where to go 52, back and forth, back and forth. But here's something that I don't talk often about, but I'm going to share with you. It's the ATR. When markets are starting to form tops and bottoms, volatility kind of increases. So there's a tug of war between bulls and bears. And in the case of tops, people are nervous. There's distribution sellers, and then there's buyers on the dips, and you get these wild swings. So, but one thing we don't want to see, if you're bullish the market, is the ATR to go up. And if we go forward here right now, we can see that clearly the ATR, the 10-day ATR, is rising. So that's indication that there's more potential volatility in the market. And volatility breeds fear, fear breeds selling, and we get some more downside. So this is going to take a little bit of time. That's all I got for tonight. Bottom line, look for deeper pullback in the IWM. Look for those September call spreads. Put those in your portfolio. And then watch NVIDIA in the resistance. And again, look for cadence for its resistance. And I'll see you for a weekend video. And we'll wrap up to see how the end of week signals generated, which that's always exciting for me, because we look for all these brand new weekly sell signals, or what's a fresh new buy signal. And I'll put that out, and we'll have our newsletter. Have a great rest of your evening, and I'll see you on the next video. Thank you.